Good afternoon, everybody, and welcome to today's edition of the Friday's webinar sessions. My name is Emmanuel Akinola, Market Analyst at HFM Nigeria. Thank you for coming today. I hope everybody's doing fine. I hope everybody's doing well. We've had this trail of sessions for a couple of weeks, and I remember that some of the topics that we've covered are pivotal for what we are going to be discussing today. We barely have an hour to do what we have to do, so we might not have so much time to reteach some of the concepts that we're going to be talking about today. For example, the concept of support and resistance webinar has been done. We've also had a webinar on pullbacks and breakouts, in the market. We've had webinars on Fibonacci. We had webinar on moving average. We've had webinars on MACD, RSI. We've had webinars on choosing entry points in the market. And all of this has helped us with trading the global financial market. And this, for me, is one of the most important things that we must pay attention to, especially in the place of trading. And one interesting factor that everybody also needs to concern his or herself with is the fact that the topic today is finding high probability entry into the market. Finding high probability entry into the market. There is entry, there is exit levels, but then the topic today is a little bit different. High probability entries. That is, we're not just talking about finding normal entries. And let me just give you a recap or a reminder of some of the things that you must always hold on dear to, especially in the place of trading. And it is key that this thing is not, limited to few people. Entry into your trade is as important as your analysis itself. You see, making analysis to determine if you're going to be buying or if you're going to be selling is as important as also determining, okay, this is where I am going to enter into my trades. Entering into trades is pivotal when it comes to trading. We don't want to enter into positions anyhow. And that's why we've noticed that a lot of people who have always communicated difficulties with entry or talking about how they've entered into positions or trades, and then maybe when they took a buy, prices then immediately goes to a sell, and then they take a sell and price goes to a buy. We then discovered that eventually, most times, it is always difficulties with entry into the market, which is why we, specially introduced teaching support and resistance so that that can shape your understanding of where you can enter into your trades and where you should not enter into your trades. We already know by paper trail that, you see, every buying entry into the market needs to come from a support. I don't want to say a support zone. Why? Because anything could provide support. It could be an horizontal support zone. It could be a trend line providing a support. It could be a moving average providing a support. It could even be a Fibonacci providing a support for you to enter into your buy trade. And at the same time, we also know that every sell position needs to come from a resistance. Whichever way you're using to get that resistance, if you're using highs from a session, maybe highs from Europe or highs from Asia, or you're using maybe support and resistance, you're using what's it called? Fibonacci's or trend lines or vertical lines, or even if you're using moving averages, you just need to understand that your sell needs to come from a resistance, right? Because we need to enter in line with people that has the same agenda as you. And this is one thing a lot of traders don't understand. A lot of traders believe they are trading alone. A lot of traders believe that they are the only ones in the market, and they don't usually consider what other traders will think. I mean, this is something you need to include in your trading. If I enter at this point, is it possible that other buyers or other sellers are also interested in this level? That's a question that you need to answer if you really, really want to understand what it means to find high probability entries. High probability entries are entries backed by numbers. What I mean by entries backed by numbers is entries backed by orders. Some of you might be wondering, I don't want to go this deep, but some of you might be wondering why you find weeks in trading. Why do you have weeks? What is the purpose of the weeks? What does it tell you? Or how does the weeks even form? You understand? For those who have taken some, technical classes or thereabout, when we talk about weeks, we talk about rejections. But the question is, how many of us even knows, what rejection is or what even causes rejections in the first place? All of this. When you begin to see price, struggle at some levels, what do you think is causing it? Do you think that those weeks are pre-recorded? Maybe you think those rejections are pre-recorded by the market. Maybe you think your broker somewhere has predetermined that there must be a week at that point. No, 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 no. You see, you need to understand something about trading and about levels. You see, psychological levels should be one of the most important things that you pay attention to. And psychological levels, it sounds funny, but psychological levels are levels that other traders as yourself can also point out and then use that level to make a decision, which means a lot of people can definitely see this, and they can see for like the past 3 days. Is it 3 days? From Wednesday, the first time price got here, we saw rejections. So let us even assume that we never knew that there was going to be a rejection at that point. But what about the second time? Again, price went into that territory. We also saw rejection. Wow. So I've now seen 2 rejections. That means something must be here. Something has to be there. For price to reject it not once but twice on the same day. Okay. And then Thursday came around. And then the first one again, price rejected, making it 3 times. Let me tell you something. By the time traders begin to see, this consistency in rejections from this level, it becomes psychological. In what way? Because people are now starting to see it. I can see it. You can see it. Millions of other traders around the world can also see it. And what can they see? They can see the fact that price gets to this particular level, right? And then it gets rejected. Ooh, psychologically, I begin to register that level as, okay, this could be a really strong level for sales. It looks like sellers are always camping around this territory. Because 3 times, which means looks like this is a level where sellers really try to defend. This is a level where sellers really try to step into the market. Which means the moment I saw this movement back to this point. It is not going to be weird for me to see that there is also another bit of rejection again and price dropped. 4 times. 4 times price tested that level and it sold. It means that level is a proven sell level, a proven resistance level. But the reason why I said a proven sell level before even calling it a proven resistance level is because a level might be resistance and might not be strong enough for a sell. But this level is strong enough for a sell because it's a resistance thoroughly defended by sellers. You can see it, like it is so bold. Look at it here again. From the past, from 21st of August, you can see that that same level caused a massive rejection. Look at this empty candle was rejected very close to the same level. Look at it. It's exactly the same level, which means, you see, psychologically, I must have, registered that level for, that's a very strong level for itself. That's a very significant level for itself. So when we say high probability entries, we don't mean just, support and resistance, yes, but not just the support and resistance alone, but support and resistance backed by substance. Prices are rising. Now, this knocks home that idea. Look at something here. For those who know about the concept of support and resistance very well, you'd see that this was, a mid-level resistance somewhere around here. Somewhere here. You find this here, although scattered, but yes, that's a mid-level of resistance somewhere around here, right? If you look at it, it's a level that was, actually a support here. It became a resistance madly at this point. Also was resistance here. So when this price was going up, some people might be thinking, since this is a resistance, this could be the point where price could continue to go down. Let me tell you something. In as much as I'm not disputing that that's a resistance, solid one at that, which could naturally have caused price to go down. But if I was a seller, and I'm looking for a sell on pounds JPY, this mid-level cannot be the answer. You know why? Because this mid-level had been broken how many times within the last few days? Within 2 days, do you know how many times price has broken this mid-level of resistance without, as if it's not even there? Look at the way price, went beyond it here, went above it again, went beyond it here. Again, at this point, price was able to move above, move below, move above, move below. So eventually, even though it is a resistance, it is not really standing out as a level of high probability for itself. If I was looking for a downside on a solid market analysis, this is that direction for me. This level for me, if this level isn't broken, that's my sell. Why? Because the weights are evident, the selling pressure there is evident. It is psychological, which means other traders who might not even know how to pick out mid-levels of support and resistance. Mid-levels of support and resistance might be open to advanced traders. But you see, people with simple understanding of support and resistance can easily pick out these ones. Your highs, your lows. That's what they learn. They just learn high point, low points. You understand? And you must not forget that in trading, you get a bigger edge over a lot of traders when you can combine market analysis with technical analysis. That is, when you can determine if you're going to buy or sell either using fundamentals or sentiment before bringing it down to technicals to enter into your trades. But don't forget, a majority of people or the majority of people that you're trading with in the market are technical traders, if you don't know. Hmm? That's the truth. Most people that you know, every novice trader, every amateur trader that you see today would learn technical analysis because for them, it looks like that's their easiest way out to making decision. So they easily learn high, low, support, resistance, learn MACD, learn RSI, and the rest of them. Most academics that you know today teach mostly technical. So it means you are competing with technical people or you're trading alongside a lot of technical traders. If your knowledge of knowing significant psychological level is lacking, even though you know how to conduct market analysis in terms of fundamentals or sentiment, it might still not be easy. So you need to understand that when we're talking about, oh, let's look for high probability entry levels, exit levels, we're talking about, strong levels that offers psychological confidence. Psychological confidence in the sense that you believe that other people can see the same thing. Please, at no point in time should a trader be feeling like he's the only one who has seen this. If you're the only one who has seen that, there's problem. If you draw maybe a trend line on a particular market, for example, you draw a trend line, a really nice trend line, and then in your mind you feel like I'm the only one who has seen this. If you're the only one who has seen it, there's every likelihood that that level will fail you because there's joy in the numbers. Hey, because if you forget, let me remind you that one of the major reasons why prices is said to always rise from support is because it is assumed that buyers are more than sellers. And another one is, and for resistance, it is assumed that the reason why prices should fall from resistance is because sellers should be more than buyers. So if you know this, you must know that there is joy in the numbers, which means the popular a level gets, the more psychological it gets, the better. If people can see it, I mean, if anybody comes into this live right now and sees me talking about this level here, the person can easily relate. Why? Because it is clear. Even if the person has just basic understanding of what support and resistance is, it is clear. This is a level where price is known to turn back. If you see it, let's use this. Look at this. Let's just draw it very big. Yes, one. Look at it again. Two. So basically, anybody who is coming can also see this. So I don't need to, over explain it to the person that can't you see that it's a resistance? It is glaring that that is a resistance. Psychological levels. There is joy in the numbers. And that's one thing I would always love to communicate with traders. You must understand that there is joy in when a lot of people believe in the same direction and from the same level. Find that clarity in trading, even though it is simple support and resistance. But instead of it just being any random level, make it a level that people can also key into. I'll give you some tips. You see, highs and lows are very important levels when it comes to high probability entries in the market. This one's really key levels. If you also look at it here as well, you can see these lows as well here. You can see these lows. You can also see these lows. These are like really key levels. It is clear Price does that up and down with price. So this one is like a really key level when it comes to technical analysis and looking for high probability entries into the market. But another thing that could also, stand out for you when it comes to using support and resistance to carve out high probability entries into the market is some really nice break and retest. You see, if you find a market that price has broken, let me tell you facts. Let me tell you facts. Maybe you are in a particular market, you're analyzing a market, and you're looking for a really good support level to trade with or a really good resistance level to trade with. If you see a breakout beyond the level that has not been retested, oh my God, pay attention. Pay attention. You see, those levels also offer you some really great high probability entries in the market. Because, we used to say break and retest, right? Price breaks a level. It is assumed that the market is owing that market a retest before it can solidify any move back to the top. That's the way it is. So naturally, we always expect that following every break, the market owes us a retest. So if I'm on a chart, I'm looking for a really solid level of support and resistance to use. If I can find or spot any untested level following a breakout, that is the level I'm targeting. If I spot it, that's the level I'm targeting. I don't care how many days it will take price to go back, you will go back. Because unproven levels without a retest remains unproven. So when you look at this really, really significant break above 0.6760 on AD USD at this point, here, you'd see something. You'd see that, for a while, price had been rising, but then it had been struggling at this point. You see this rejection at this point, it was really good of a rejection. But then when the dollar started losing value, following market expectation of a 50 basis point cut in interest rate for the Federal Reserve, we saw a breakout. It was massive. And then price was able to break this level above. If you bought after this, it means you don't understand what trading levels are in the market. Even if you are expecting a pullback and you are expecting a minor pullback, following this kind of breakout, following strong breakouts like that, minor pullbacks will not help you. Minor ones will not help you. Ask gold. I'm going there, especially on gold. You see, because on some really volatile days, you would see price shatter some levels on gold, really strong levels, and then it just goes beyond it. And then you're wondering, maybe it will continue to just go like that. Let me tell you facts. 10 times, 8 times, 8 or 9 times out of 10, price has to go back to retest that level. If you look at it here, it was a perfect picture. Look at this. Price finds a way to come back. Even if you took just this movement here, even if it was just this movement here, it's about 57, 60 pips. Just following a simple break and retest. So if you're looking at a chart, there are some specific things you need to be focusing on. Number one, clean clear levels, psychological ones, that anybody can come in to see and say, yes, I can see this is a resistance and I can see this to be a support. Two, also check if you can find any untested breakout in recent times. Because if there is an untested breakout in recent times, every other support and resistance that you are seeing above or below it might be minor until that retest is done. There used to be a beauty like this on USD card as well. But let me first quickly go to gold and show you as well on gold. You see, I think the first time price tested 2530 on gold, it was a really, really solid breakout. Oh my God, look at the absolute beauty. Do you know why this is here? Because I entered into this trade. So I can really tell you, you know, that this happened. I was there. That line has been there since because I entered this trade. Look at this level on gold. I mean, look at this. A really strong resistance level that has held price for about 3 days. August 9, 12, okay, yes, 9th, 12, 13. Price was unable to go beyond this level. And then out of nowhere, we saw a really solid push above this level. Like really solid push above it. And then this happened. Following this, we see some really nice movements, rejections at this level, and then suddenly price finds its feet, was able to go beyond it. I know there was a quick retest here, but a lot of people wouldn't have caught this. It just happened quickly. So just assume price went as high as 2530, almost 2535. It was so strong a bullish movement. What do you think was going to happen? The most significant thing that would happen is for you to be waiting for, you see, one day, price is coming back as a solid retest to this level to really show that we are really beyond this level. If not, we're going back below it. And until this happened, look at the beauty, the absolute beauty of this level. Price jumped immediately back up. If you were here on that upside, you know how much you would have made now. This, you see, it just might take time. It took some days. It took about 1, 2, 3, almost 4 days for that retest to come back to that level. It might take time, but that's what makes it high probability entry. We're not just teaching entry, we've taught entry, which means some minor entries with simple support and resistance on a daily basis. We've taught that. There are videos already recorded on our YouTube channel. You can always go and peruse that when you're free or after the session. We're not talking about just minor entries now. We're talking about high probability entries now. Break and retest, unproven ones, strong levels. I used to have one on USD card and I used to always chase like for a long time. I mean, I was there. I was sleeping on USD card at that time, even though USD card is not part of my favorite pair. But when I spotted that particular move, you can't resist it. It used to be on H4, I think. Yes. Yes. It used to be on H4. Yes. Look at it somewhere around here. Mm-hmm. Let me see if we could get better on D1. Oh, yes. Oh, yes. Look at something. Look at this move somewhere around here. You see, price had been, moving higher for a while. Found resistance twice around this level, you know. But eventually, the time he was going to push above it, it was a very strong push. Look at, it went so far. Like, it went so far beyond it. As at that time, you'd be thinking, this is over now. It won't come back. It has gone far from that level. You see, you don't understand the market to that point. That's just one thing I need you to know. The market never forgets levels. You don't break a level and forget that you've broken that level. What happened after that? Price came back, offered that retest, not once, not twice. In fact, 3 times. Price continued to offer a movement back to that level, and it continued to hold every single time. It got to a point, USD card was the only thing I was trading. I remember I used to have, a weekly update I used to always send out to subscribers, until I got busy. I used to, I think the last few ones was USD card. It was sweet. When it comes to high probability entries like that, there are some really interesting things you have to focus on. We've talked about, you know, psychological levels, clear ones that people can see, not the ones that are hiding that you think makes you an advanced trader. Because the clear ones are more important than the ones that are hidden. Clarity is very, very important. Now, but at the same time, with all of these things, you must also understand that there's something else that we also need to talk about so that we don't, make this too sharp. Is this is another opportunity. Oh my God, this was beautiful. Look at this. Look at it. Look at this really solid level of resistance. The price broke on Euro USD for a while. Up until yesterday, it was not tested, but yesterday that level was tested. Look at it. You know, price, just broke and went above. And then you say it's a lie. It won't come back again. It has gone. It has gone. It won't come back again. Up until yesterday, price came and tested it. This is it. Up until yesterday, price was there to test. Now, the future of this, under normal circumstances, via technical analysis, is for price now to call in more buyers, and then everybody can go back up together. But don't forget the place of analysis, because the current movement in the market, the downside that you've seen over the past 2 days, is sponsored by the dollar and the market repricing the odds of a cut in interest rate. The market used to price in a 75 basis point cut in interest rate, a 50 basis point cut in interest rate, but we've now trimmed the odds from 36% to 32%. There is also PCE later in the afternoon that might further determine if these odds are going to be further trimmed or we are going to keep our expectations still at 50%. So that might determine what will happen to this asset. But if we keep it strictly technicals, this is going up. That's a big, strong one, and eventually a proven retest of the level, and you can see the rejection, which means under normal circumstances, we should be going back up. But there is data today that might cause this move to either go up or break this level. So you have to be careful with that. That's on fundamental basis. Now, you also need to understand something about confirmations and confluence. Yes, you see, you don't enter positions just because it's a support or it's a resistance. There are few things that you need to do when you're trying to confirm a level. Mm? A level can be support, it can be resistance, but you don't just fly into positions just because you can find the support or just because you can find the resistance. It wouldn't work. You might sell yourself short. You might sell your short. You might sell off your short. There are few things when you're looking at, confirming a level. Number one, let's just draw some examples. Let me just draw some examples for you to see what I'm talking about. Let's assume this is a support level, and then a red candle comes. One like this. Oh, sorry. To test the level, forming or ending up like this, or one comes like this. Testing the level, or you have one like this. Now, one thing you must not do is get too excited with price testing your level, no matter how solid it is, and getting carried away. You see, market pressure is one of the major things that you need to look out for, especially when you're looking at entering into market from a particular level. Price cannot be testing a level with this kind of candle on your support, and you think it is okay to buy next. It's not okay. That's a full body candle with selling pressure. No, even like you cannot even find any element of pushback from buyers, because you must understand that the reason why there is a support level and the reason why you can find wicks, which is pushbacks against some entries, because if a level is going to be defended, there should already be some pending orders already laid there. You see, those pending orders are the ones that cause that rejection you see. Like this one, for example, when price got to a level around this region, the only reason why this week it formed is because there's some pending orders that are already activated. Some take profits were already activated. Some new buy orders were coming into the system, which means the market was really ready to stop that sale and put up a bit of resistance for buyers. But you see, this kind of candles are not showing any element of, buyers even thinking about coming into the system. So if you come and you buy, it is you setting up yourself in the market. The pressure is too much. It means sellers are not finding any pushback from buyers. You cannot buy, even though it's a support, because there's every likelihood price is breaking that region. Even this one is not good. Even this one, because this one means mantle was taken from buyers. This one, yes. It means at some point this candle started as green. But then sellers took over and then have pushed it lower to that level. And then you still think it means you should buy. Absolutely not. There is no element of surprise. There's no element of pushback. There's no sign of price action. There should be something that gives you confidence that, listen, there are other people here. I told you when I introduced this session, there is always joy in numbers. Please remember that thing. There is joy in the numbers. What that means is it is better when you are not the only one who wants to go in that direction. If there are other people who are also willing to go in that direction, the signs must be there. The signs has to be there. With these two candles, it's showing that there is no sign that any other person is interested in buying like you. It must show signs that there are people who are willing to do the same thing as you. If you find those people, yes, join them, enter into that trade. If you don't, pause, press pause. These are elements of price actions. It could be reversal candles, as you know, but I don't pay so much attention to reversal candles. All I need to see is price action. I just want to see some elements of pushbacks. I just want to see that sellers don't have their way forming a full-bodied red candle. Show me something. Give me a week. Show me rejections. Show me empty candles. Even if it's a doji, I'm okay with it. But show me something that there are people willing to do this same thing I'm willing to do at this level. If you don't find it, press pause. Don't be too, ecstatic to enter positions. A lot of things needs to be confirmed. And confirmation can only be seen if people buy into the same idea you want to trade. If not, it's not time. There must be signs. There has to be signs that people buy the same idea you want to buy. For example, you see that pounds JPY with all the weeks, those weeks are elements of confirmations. They are signs for other sellers that you are not the only one here. That's it. When you see those weeks are simply saying you are not the only one here. You see, all of these weeks are simply saying you're not the only one here. But then, look at this. A full-bodied candle is forming. Now, what is the difference between, oh good, I really love this. What is the difference between these candles? This one's here. How come, price didn't reverse? Why didn't price reverse at that point? What's happening? What's happening? Why didn't price reverse at that point? Don't forget. Hmm? Don't forget. Look at something. Pay attention to this. Pay attention to this. You see, these two candles were red. Hmm? They were once red. Because at this weak point here, it means at some point it was a red candle. But buyers refused to let go. Because for a candle to get here, it means at some point, this candle was a red candle, which means there was actually rejection. But the rejection was not completed. It didn't end up as a red candle. It's supposed to end up as a red for me to really see that, yes, sellers want to step in. It didn't end as red. It ended as green. That's a red flag. A market that had sold to that point and yet buyers were still able to take it back up, turn into a green candle, that's a red flag, number one. Which means I should have known that it's not time to sell yet. Buyers are still piling pressure. Then again, the next candle. The next candle also started as a red. In fact, it dropped up to this point, and yet buyers said, no, we're not going down. And then this candle still ended up as a green candle. The problem is most people just take candle pattern. They will just say, that green candle there is an hammer or is an inverted hammer or something. That's what they say. That candle there is an Sanama. It means to sell. No, it is different because in this case, it had already sold, but buyers pushed it back to a green candle. It no longer holds that same meaning as the one you think it holds. The second one again, it sold to some point, buyers said no. So do you think it is weird to see that prices are currently going up? Absolutely not. Because buyers were saying, listen, I'm still here. I'm still here. I'm still here. Buyers kept pushing against sellers, which means buyers kept daring that week there, daring sellers. I wouldn't have entered this, and you also shouldn't have entered it because the signs were not there for you to enter into a sell. The signs that were there were cautious signs. They were red flags saying, wait, these opposite party buyers are still in the system. Coupled with the fact that pounds is actually stronger than JPY today. For those who have not seen it, the pounds is stronger than the JPY today. It was uploaded on a Telegram channel. Also, if you do your analysis, you'd see that pounds is actually the strongest currency in the market today, especially against JPY. So just taking a sell against that, taking a sell in this market would have actually also been against market trend. That would have even been wrong. That's like two wrongs. You understand that? That's like two wrongs. Number one, deciding to even take a sell when clearly pounds is a stronger currency against the JPY today is one wrong. Number two, still taking a sell, clearly seeing that the level is still showing that buyers are still ready to put up some elements of pushbacks. It's wrong. By now, your stop loss has been taken out. Because someone somewhere is also saying, but sir, this price can still come back down because of these two candles. Well, yes, there's possibility that this is just because it's month end. Yes, today, this is like the last trading day in the month of August. Month end flows can always cause this to happen. So you will see profit taking happen. So you can see price begin to push beyond levels that they wouldn't normally have pushed beyond in a normal day. That could be an answer to this. But even still, if you had entered the sell, your stop loss has been taken out. You wouldn't be there when it's coming back down. It has taken out your stop loss. Always look out for confirmations and don't be what language do I use? Don't be soft with your confirmations. Don't be soft with your confirmations. Don't take confirmations lightly. Don't, I saw it, so I just jumped inside. Be careful. And confluences. You see, confluence with levels would also be good. For example, if you find maybe you have round numbers, which would offer you psychological levels, maybe you have moving averages that you use. For example, I think we taught the 50 MA as support and resistance on the channel. You'll see the video. If you go to YouTube, it's there. Now, in the first place, the price is actually above the 50 MA. This is not offering us any confluence with this level. Let me see. Where is the 200? It will be maybe way is below it. So eventually, even the 200 is below price, which means this is clearly talking about a buy market. But look at, oh my Lord, I just saw an absolute beauty of a confluence here with the buys over the couple of days. Oh God, look at this. Look at this normal support level that you could have drawn by yourself, which is a simple swing level, but also confluenced with the moving average. You see, the moving average has played a major role with price rising from this level over the past few days. Look at it. Even though it's a normal support on its own, But the moving average also being at that level is a good sign. That's what we call like a confluence. When something else agrees with what you already know, you understand? When something else just plays into the part of what you already know. So moving averages would be an indicator that you can use for, confluence to see if the idea that you have in the market is valid or not. And also one of my personal favorites, especially when I'm looking to confirm some moves, is my yes, yes, absolutely. It's still there. I had this up yesterday. Fibonacci. We also have a lecture on Fibonacci or recorded on YouTube. So for those who might not know how to use Fibonacci, we have one. Yes, you see, I had a fee during the teaching yesterday because this is a resistance, but not only is it a resistance, it's a resistance in confluence with a fib level. Look at it. A fib level offering me resistance at 38.2 and a normal resistance that I can find by myself. I found the resistance by myself that, price might not be able to go beyond this region, and that might mean that dollar will not be able to sustain, much more strength at that time yesterday. But then to add extra to really see if that idea that resistance is going to hold price, I just added a feed. Now, feed offered a confluence. That is when another factor offers you something similar compared to what you already have in mind. I already had a resistance in mind. I already saw this price might not be able to move beyond this, but can I have something extra that can offer me maybe something close to this? Feed offered that, that is also a resistance. You're right. So feed could be something that you could add to your tools for, a little bit of confidence and for looking for high probability entries into the market. Yes, feed is a very good tool. We spent an hour, explaining how the feed works alongside the moving average on one of the videos that we recorded in the past. If you just go to HFM's YouTube page, HFM Nigeria, please subscribe and follow us. You'd see the video there. It was even tagged trading, moving average, and Fibonacci retracement. You watch that video, you really understand how to, use the Fibonacci also as a tool to find some confluence with some really strong levels of support and resistance. It is one of the most important things is to just understand that it always gets better when more than one thing explains what you're talking about. For example, I've been targeting I think, it's Euro NZD pair for a while now. I have my eyes on that pair. Now look at this pair. Hmm? Look at this guy. I'm about to maybe analyze this pair on a technical side first before even talking about its fundamentals. And I'm like, okay, let's see. For example, the 1 hour time frame shows a really nice downtrend, but I need something more compact. So I want to go to H4, see what's going on there. All right, that's really really nice of a downtrend, and there is I think there's a support in front of price somewhere around here. Okay, let's stop price movement. All right. I want to put up the fee, but in the first place, if I'm doing strictly technical analysis, it's an arm trade that is here. This looks like a correction. So I can pull up my fee from the lowest point I can find at this point to the highest point I can find. Now, from what I can see here on this fee level, we're way below 61.8 when it comes to retracement. And that means Phoebe is telling us right now that downside is the most likely thing to happen. Fib is telling us that downside is the most likely thing to happen. But where can that downside come from? In the first place, listen to this. In the first place, there's a resistance here. Yeah, it's a mid-level of resistance. It was resistance that became support, which means I could be thinking of this level for further downside, but I don't feel confident in that because this is a stretched downside. If there's going to be any correction, it should be an expanded correction. It cannot be that kind of minor correction. So if I was going to look for, a better level to use for my downside, as a resistance, I'll most likely consider a retest of 61.8. Don't forget that the levels on Fib are actually support and resistance, which means this 61.8 was actually a support when price was going down, but it was broken. Don't forget, every Fib level either acts as support or resistance. But as at this time, when price was going down, 61.8 was a support level, but it was broken. Now, if you just go back to what we said maybe in the first 20 minutes, a break and a retest can be one of the most interesting high probability entries you can find in the market, which means that now that price has been able to break this level, the base level for further downside remains price going back to retest this level. If it does retest this level, and the market is still looking for further downside on euro, that is going to be the best place to take a sell. Even though there will be some minor resistance in between, but the best in terms of high probability entry based on a simple break and retest. Price has to go back. It might take days, but price holds that level a pullback. That's what we're saying. We don't want to just randomly pick out levels to trade. Pounds NZD, I was looking at it this morning, and pounds is currently the strongest currency in the market. So there's some really nice moves on pounds NZD this morning, majorly offering us pullbacks, which is really good. But the question is, how far is the pullback? You can look at it, it's very similar with Euro USD. So let's just draw Fib from the peak point. Sorry, the lowest point you can find. I think this is the lowest point, or this one here. I think they're currently within the same region now. Yes, they're the same place. And this. Yes. If you look at that, this is actually a resistance normally because it was a support under normal circumstances. And every broken level of support becomes a resistance. So if you look at it, this happened, price goes, price comes again, finds support, and is able to break it now, which means it has just broken a level of support, which means price is owing us a normal resistance owing us a retest of that level in normal circumstances. But the beauty now is the normal resistance and the Fibonacci is in confluence. The resistance, even that the Fibonacci would have seen it, and the 61.8 level on Fib, they're in the same place. It's a very good confluence, which means when we see this retest of this level, all things being equal, if the NZD remains favored in the market compared to the pounds, we're going down. And that would be a really nice level for sellers, to push price lower. That's what we're talking about. Some of the key takeaways that I want you to know is it's not rock science. One, Two, it is better when you already know how to do market analysis research. Three, you don't want it too complicated. You want it simple such that other people can see the same thing and get the same idea as you have. If not, it might be difficult. You want to make sure it's a level that is psychological enough that people can see it and say, I'm willing to do this same thing that you want to do. Don't forget, like I've also mentioned, there is joy in the numbers. That means it's better, it gets better when every other person who is trading also has the same idea that you have from the same level. It is also important to always wait for confirmations. Always ensure that you don't get too ecstatic for moves. Always ensure that at least you ensure that there is every signs that price wants to move in that direction. There must be signs. There must be evidence. There must be price action. And also find conferences if you can. Pull up your fib when necessary. If it is moving averages, pull it up. Also with your simple levels of support and resistance. If you're the trend lines, pull it up. Just ensure that you do things, but in no complicated manner. It is important. Thank you, ladies and gentlemen, for coming to the session today. We always don't want to put too much in the same session. We've broken it apart. We've had a session on support and resistance alone. We've had a session on trading pullbacks and breakouts. We've had a session on how to trade RSI and MACD. We've had a session on how to trade moving averages and Fibonacci. We've had a session on how to choose effective stop loss. Today we're doing high probability entry into the market. We're still going to be doing more. We don't want to rush it. The videos are pre-recorded, so which means you are always going to have them on YouTube. This is also going to be available on YouTube. It will be hosted. Please, you can now send in